Yes, so we are live. Good evening to everyone who has joined us for the session. Good morning, specifically to Mr. Neil Gregory, who has joined us from across the earth, from USA. Um, we welcome the panelists, the session chair to the session on the climate investment. We have with us Mr. Pankaj Sidhwani, who's the Chief Business Officer of Tata Clean Tech Capital, as the session chair. Being a person from the sustainable financing and project financing domain, he brings in a lot of knowledge and a lot of expertise from sustainable finance industry. We are honored to have him as a chair. Over to Pankaj Sidhwani, sir, please.
So thank you, Aditya. Morning, good afternoon, good evening to all of you. My name is
Mr. Sidhwani, we are losing you in between. Maybe there's some issue with the microphone.
Is it any better now or is it still the same?
It's tad better, but there's some amount of disturbance in between. I think it will sort it over itself. Please go on.
My apologies. In case it continues, please. So once again, very good morning, good afternoon, good evening to all of you. Let me begin by thanking CII all important session. Climate change is possibly a threat faced in weather events are becoming. Within first 8 months of 2021.
Mr. Sidhwani, I'm really sorry to interrupt you, but the microphone, we're not able to hear you in between.
Let me see if this is getting any better.
Yeah, this is much better.
Is it any better or
Yes,
is
yes,
it
it is.
still the same?
No, it's much better. Thank you.
All right. So let me attempt this once again. So yeah, so climate change is possibly the biggest threat modern humans have ever faced. Extreme weather events are becoming a norm across the globe. Within the first 8 months of 2021, we've seen floods in Britain and Germany, wildfires in US and Australia, unprecedented heat waves in northwest Canada. Back home, we saw Sahara and Bihar, frosts and cloudbursts in states of Himachal Pradesh, and excessive rainfall in Goa and Uttarakhand. More than 75% of Indian districts, which are home to over 638 million people, extreme climate event hotspots. Developing world requires roughly $3.5 trillion to combat climate change. India alone might require $1.5 trillion over the next 10 years. These investments do look large, though in isolation, but seem entirely achievable when you compare it to the global GDP of 80 trillion or global annual savings of $20 trillion. In fact, funds required are not even 15% of the COVID stimulus rolled out by governments across the world. Reality on ground, however, is very different. Uh, there were estimated $2.6 trillion investments in renewables in the last 10 years, but only 5 developing countries, namely China, India, Brazil, Mexico, and South Africa, could manage more than 20 billion. Interestingly, developing countries have the most renewable resources, are most vulnerable against climate change, and yet get a fraction of global climate investment. This needs to change. We need to channelize investments from the developed world to the developing world and help it wage the battle against climate change for itself and for the world. We also need to bring in the same sense of urgency and the same spirit of collaboration that we saw and demonstrated dealing with the pandemic. India, in particular, can play a very important role. More than 78% of India's infrastructure is yet to be built, and India has the opportunity to build it all green. This means India can offer substantial scale for green technologies and investment. In addition, India's robust and transparent institutional and governance framework lends a lot of confidence to the global community. Multilateral institutions have played and can still play a very important role. Many ambitious renewable energy programs, ranging from LED street lighting to setting up of large solar parks across Indian states, were launched with the active help of multilateral institutions, especially the World Bank and the IFC. Where we need multilaterals even more today is where they crowd in private capital, leverage public finance through risk mitigation instruments such as guarantees, first loss cover, trade wraps, and viability gap funding. To talk about all this and more, let me invite Mr. Neil Gregory. But before that, let me just give a brief background about Mr. Gregory. Mr. Gregory is Chief Thought Leadership Officer of the International Finance Corporation, the private investment arm of the World Bank Group. He leads IFC's engagement with the impact investing industry, which IFC launched in 2019. Under his leadership, he has held a range of senior strategy and management roles at IFC, including research, business planning, investment, and advisory functions. He has extensive work experience in South Africa, China, Africa, and Caribbean. A British national, Neil has an MA in economics from Cambridge, an MSc in economics of development from Oxford, and an MBA in international business from Georgetown. He's a fellow of the Royal Society for the Arts and adjunct professor of Johns Hopkins. Welcome once again, Neil, and over to you. Thank you.
Thank you, Mr. Sidwani, for that introduction, and very pleased to be with all the delegates and attendees at this conference. A very good evening to you all, and very much welcome the opportunity to talk about how we're going to collectively rise to this challenge that Mr. Sidwani has laid out in his introduction, which is how are we going to mobilize the financing we need to make the investments in a low carbon economy that we need to combat climate change. Let me put some slides up on the screen to help us illustrate the points that I'm going to make. Just give me 1 minute. So the starting point is this large financing gap that we see between the amount of money needed to combat climate change and the amount that is flowing today. So there's a range of estimates, but it could be anywhere between 1.6 and $3.8 trillion needed to be invested each year if we're going to keep climate change below 1.5 degrees Celsius, in line with the goals of the Paris Agreement. But today, until recently, only a small fraction of that investment was actually happening each year. Some of the most recent numbers we have for 2019, it was something like just over $600 billion. And it's growing each year, but it's clearly still just a fraction of what we need. So you can see on this slide that the annual need should be something more like when we come to India, the annual need should be more like $170 billion. And again, you see a little more than 10%, something like $19 billion in the most recent year we have for India's investments for climate change. So there's a big gap to be filled in India as well as in most other countries in the world. But what makes me optimistic that this gap can be filled is that the investments that are needed are actually increasingly attractive investment opportunities. These present opportunities to actually make good money and for investors to achieve good financial returns. So let's take a look at what some of the key areas are where we see these investment opportunities and the size of the potential. And the potential here is that these investments can both contribute to combating climate change, but also contribute to economic and social development and have the opportunity to create large numbers of jobs. It's natural to focus on jobs that will be lost or disrupted by the closure and scaling back of activities like coal production, which need to be reduced in a low carbon economy. But it's important to realize that the investments in addressing climate change will themselves create many millions of new jobs, as you see on this slide. So there's a wide range of areas of the economy where these investment opportunities present themselves, starting with obviously with the power sector, decarbonising the means of generation, but also scaling up distributed generation and storage. But there's also important opportunities in other areas such as construction, in retrofitting buildings for energy efficiency, as well as building new buildings using green materials and for greater energy efficiency. Opportunities in urban transportation and the way we build urban infrastructure in a way which reduces urban heating. And there's opportunities across industry to find and implement lower carbon methods of production. Likewise, in agriculture, climate smart agriculture can not only use less carbon, but can also use less water, which will be important as a warmer global climate also means the more variability in the availability of water. And finally, other areas of transportation like airlines and shipping can also transition to lower carbon means of fueling their activity. So there's a wide range of opportunities across many different industries. Now, when we look at South Asia more specifically, we can see that this pattern presents itself in the South Asia region, just like other parts of the world. So we can see that there's urgency in investing climate in this region. We can see that this will create opportunity in the context of recovering from the COVID crisis to also create new jobs, as well as reducing greenhouse gases. And you can see here, there's numbers for all regions of the world, which give a sense of the size of the investment opportunity. So let me highlight the numbers for South Asia. We estimate that the investment opportunity in this region is something like $2.8 trillion, which could create over 50 million new jobs and could reduce greenhouse gas emissions by over 800 million tons. So that's really the scale of the opportunity we're talking about. Just to put this in context, we think that in India, the investments of this type could contribute to 1 in 4 new direct jobs and something like a third of all investment opportunities that we see in climate change are actually in this region. Drilling down a bit more on the specific areas in India, we see the biggest opportunity in green buildings. There's huge opportunities both in retrofitting existing buildings and also as India is rapidly urbanizing and has large needs for new construction of buildings, there's the opportunity to both use greener building materials and build in greater energy efficiency from the beginning. Likewise, India is rapidly increasing its use of modern transportation, and so adopting electric vehicles is a huge opportunity. This will both contribute to climate change reduction, but also address urban pollution and other problems that you have from the increase in vehicles using internal combustion engines. And so you can see through the other sectors of the economy that there are specific areas which have large investment opportunities. And adding this all up, we think that between now and 2030, this could be a $3 trillion opportunity in India, and again, create large numbers of jobs and reduce greenhouse gas emissions. So now let's turn to the challenge of how do we raise the finance to implement these investment opportunities. And so the first place I want to start is the opportunity to mobilize finance from green and sustainable bonds. So IFC and the World Bank were pioneers of this product about 10 years ago when we issued our first green bonds, which were bonds for which the use of the proceeds were dedicated to green investments and with clear monitoring and reporting on how those funds were being used. This innovation has now become a $1 trillion market for green and social bonds, and there's just for green bonds alone, something like a $300 billion market today. And we see a lot of appetite for this market to continue to grow. The large pools of capital, something like $80 trillion, is being managed globally by institutional investors like insurance companies and pension funds, who are all being pressured by their stakeholders to increase the amount of their investments which contribute to addressing climate change and achieving the sustainable development goals. Green bonds fit very well into their portfolio and match their investment appetite. They basically offer the same risk profile and financial return as regular bonds that they already have in their portfolios, but with the added benefit that the proceeds are directed to green and climate purposes. What we're seeing in the market now is a new innovation in the way these green and social bonds are structured. So originally, as I mentioned, the focus was on just the use of the proceeds of the bond that was being raised. Increasingly, we're seeing bonds issued where the issuer commits to achieving certain key performance indicators across the whole of the business. So it may not just be that the use of the funds raised to the bond are contributing to greening the company, but that the company may commit to certain targets for reducing carbon intensity or emissions across the whole of its business, not just the part that's being financed by the bond. I think we'll see more of those sustainability-linked bonds being issued in the future. And the interesting feature about those is that in many cases, there's a financial incentive that the bond issuer pays a lower interest rate if they achieve their climate targets, or conversely, they may pay a penalty interest rate if they don't achieve them. So this is giving a stronger alignment between the goals of greening the firm that's issuing the bond, or indeed the government that's issuing the bond, because we see green bonds are issued by both public and private issuers. And so we think this will be an important product for mobilizing large amounts of capital from institutional investors around the world into investments of the type that we've talked about. The other big opportunity we see for financing climate change is from impact investors. This is a term which is still fairly new in the market and not well understood. Let me explain how impact investing is different from ESG investing or other types of sustainable investing. What an impact investor does is they start with the intent to contribute to social and environmental outcomes, as well as to achieve a financial return. They invest in ways whereby their capital makes a contribution to achieving that outcome, usually by putting new capital into firms, but sometimes supporting the company in other ways. And they measure and report on the impacts that are achieved. So this is a model of investing which is well suited to climate change, where investors have an intent to address climate change through their investments. They look for investments where adding additional capital can contribute to achieving climate change goals, and they measure and report on those climate change goals. And what we've been seeing in our tracking of the market is an increasing number of impact investment funds that are targeting clean and renewable energy, and also that are targeting climate action. So this is a type of investing which has an important focus on climate today. When impact investing started out, a lot of its focus was on things like microfinance, poverty reduction, affordable housing, and those are still important themes, but increasingly we see climate change coming up the agenda as an important theme for impact investors. So how big is this market for impact investing? Well, it's still small today, but we think with the potential to grow. The funds that have all the systems in place to measure and report on impact are currently about 2/3 of $1 trillion US dollars of assets under management. But there's a bigger group of funds and institutions which have an intent for impact, even if they don't have all of the systems in place to measure and manage it. So we think in total, there's something over $2 trillion today, which is being invested for impact. We think the market potential is about 10 times that. We think this could be a $20 trillion market, which would still make it only about 10% of global assets under management. But at that scale of somewhere around 20 to $25 trillion, that would be sufficient to finance a lot of the investments we need for climate change. And most impact investing is in private equity and private debt, so it provides a nice complement to the green and sustainable bond market, financing higher risk investments and taking equity risk alongside the bond market. So we think this is a second important potential source for investing in climate change. One thing that's held back investors from investing for impact has been a lack of clarity about how funds that use the sustainable or impact label actually manage their money for impact. So what IFC and other like-minded investors have done over the last couple of years is put in place some principles for what it means to operate a fund for impact, covering the whole investment process from investment strategy to how you originate and structure investments, through portfolio management to how you exit equity investments. And importantly, we require disclosure with independent verification, so investors actually know how their funds are going to be managed by different funds and institutions. IFC and over 140 other institutions now manage assets in accordance with these principles, including we have one impact fund from India that's a signatory, and we hope that many more will join. Already they're managing over $420 billion in impact assets for climate change and other environmental and social purposes. So let me conclude here with what I hope is a hopeful message that the large scale of investments needed for addressing climate change is not just a challenge, but it's also an opportunity. It can unlock short-term benefits. It can help with the recovery from the COVID shock by creating jobs and creating new investments, while also paving the way for longer-term gains in a world that stays within the 1.5 degree climate temperature increase, and also as a more resilient and sustainable world in other dimensions. I think we do see opportunities for new technologies to help with increasing the range of opportunities to address this climate change challenge in ways which are financially attractive to investors. And we do see that there are pools of capital that are motivated to invest for impact, and they're motivated to invest to address climate change. And finally, we see a market that is developing the products and structures from green and sustainable bonds to impact investing funds to bring together this investment appetite with the investment opportunities. So the challenge is large, the challenge is urgent, but there's a lot of dynamism in financial markets today to mobilize the capital to address that challenge. And if we can do that, we can both address climate change and add to the growth and the sustainable development, particularly in emerging markets, which will help us achieve the broader sustainable development goals as well as our climate change goals. So thank you for your attention. I'll stop sharing my slides now.
Thank you very much, Neil. Your presentation was both comprehensive and extremely insightful. Thanks once again. We have a question from the audience. Nathan wants to know why carbon capture and utilization is an area of potential investments. Why is it not getting the kind of attention it deserves? Take a shot at that.
So I think, as technologies are developing in areas like carbon capture, they will, I think, get to a point where they become financially attractive for investors. But the capital is naturally going to flow to the lowest hanging fruits, the most proven investment opportunities first. And that's why you've seen much more of the activity being in things like energy efficiency and renewable energy. Things like solar and wind power have sort of about a 20-year head start on carbon capture in terms of the technology being developed and maturing. And so over that period, we've seen this sort of downward sloping cost curve that these technologies have got more efficient, therefore have got more attractive to investors. I think we're on the same path with newer technologies like carbon capture, but they're at an earlier stage of development. So I think that you will see more finance going into them over time, and they will scale up, but it's going to be a little bit behind some of the technologies that are farther along.
Agree with you. We have one more question, and this is about why is it that most attention seems to be focused on traditional instruments when it comes to finance, or traditional sectors such as renewables or other parts of climate change? Why are we not paying enough attention to circular economy, for example? Do you want to respond to that?
Yeah, so again, I think this is more a matter of timing than anything else. And I think that you are now seeing more attention to developing new technologies, which put a greater emphasis on reuse of materials and closed loop production systems and these aspects of the circular economy, which instead of focusing just on reducing emissions at the end of the process, really focus on reducing the amount of material that's used throughout the process. So, and I think fundamentally these are going to be financially attractive, because if you can make a production process more self-contained and less requirement for new materials, then that should be a lower cost production process fundamentally. So I think circular economy approaches are very interesting for their potential both to address climate change and also to make production more cost effective and more financially attractive for investors. So what you need for these newer types of technologies to attract capital is you need investors willing to take equity risk and early stage venture risk. And this is where I think impact investing can be a very important complement to other types of investing, because the motivation of investors to seek impact is what also motivates them to take greater risk. And so you see in impact investing much more investment in early stage technologies and higher risk ventures, which is just the type of capital that you need for investing in these newer technologies. So I think that as more impact investing equity is mobilized into this space, you'll see these newer technologies attracting more investment and being adopted more rapidly.
Thank you. I have a question of my own. Given the enormity of the challenge that we are facing, given the significant amount of money that is needed to combat climate change, how do you see the role of multilateral institutions here? Do you see it changing vis-a-vis how it has been in the past many years, given that public finance is getting more and more scarce? So do you think there will be a strategic shift in the way multilateral institutions will operate going forward, given the new normal or given the new challenges they're facing?
Sure. So I think there's a couple of shifts that are happening and underway already. I think one is that we have shifted our focus to put a much greater emphasis on investments which tackle climate change. So now we have about a third of our portfolio is invested in climate-related investments. I expect that to continue to increase. And I think you see the same shift in the World Bank and in other multilateral institutions. And secondly, we put a much bigger emphasis now on what we can do to raise capital at scale from institutional investors. So the amount of capital that we can put in as multilateral institutions is not nearly enough to meet the financing challenge. So we have to focus on being catalytic and how we can raise capital at scale from pension funds and insurance companies. And we've developed a couple of models to do that over the past 10 years. We manage equity funds, which attract capital. We've attracted about $10 billion from different institutional investors. And we have a co-lending platform on the debt side, which likewise has attracted money from pension funds and insurance companies at a similar scale. Now, these models we can scale up several times over, and we need to scale up, and that's how we'll attract the capital at scale we need. But there's also a challenge of actually developing enough investable projects to put into these large-scale portfolios. And so the other shift that you're seeing in the way we work is that we are devoting a lot more of our staff time and energy to the upstream development of new investment opportunities, to making sure that the regulations and the price incentives are in place to helping remove the bottlenecks which may make these investment opportunities real, and helping with the upstream development of new projects and infrastructure and elsewhere. So it's a big challenge for us. We have to really scale up what we do and scale up how much private capital we mobilize alongside us, and that's what we're very focused on at the moment.
Indeed. Thank you very much, Neil, once again for such a brilliant presentation and profound comments and observations. We all benefited a great deal from this presentation. So thanks once again. With this, allow me to conclude this session on climate investments. Thank you, Neil. Thank you, CIM. Thank you, audience.
Thank you, Mr. Sidwani. Thank you, Neil, for such a wonderful session. So with the permission of the chair, can we conclude the session?
Yes, please. Thank you.
Thank you, sir. Thank you to session chair. Thank you to the master speaker. We request all the attendees to please join us for the next session with Ms. Katie Schindel on circular economy. We'll be awaiting your participation there. We'll learn more about circular economy and its initiatives and how does it actually drive the economic perspectives there. We await your participation there. Thank you.